Hello everyone, friends, this is Mozart speaking. Today we'll talk about a potential peak for Bitcoin before a strong sell-off. When to expect it, and what should roughly happen. I will show you in detail on the blockchain charts so that this peak can be reached. You will get a rough idea of what I mean and how long is left to wait. So, first off, my limit order for Bitcoin on the Bybit exchange has been executed. Just to remind you, I only trade there. It worked out perfectly. I placed it yesterday, on November 13th, at 87,520. I don't know how it happened, but I suspect that quite a few people set this limit order, and we helped it get filled as well. So, the low. On Bybit, I'm switching to the 5-minute chart. There you go. I don't think I've ever managed to catch Bitcoin like this in my life. I mean, with such precision. This is the 5-minute chart. The low on Bybit was 87,514. The limit order was at 87,520. Nothing was triggered. There were also Solana and Ether. Bitcoin got triggered and that's fine. For now, we wait. It's just a feature, more of a stroke of luck. Although I set the limit order, of course, according to my technique, but in the context of the 4-hour chart, the picture is still sideways. So, there's nothing particularly special here at the moment. It's quite likely that after this bounce, we will continue to move and trigger that limit order again. So, that's more than likely right now. It's just a bounce. Yesterday I did a review and mentioned that we would most likely go to work off and close this divergence. So, essentially, that's how it is for now. We dropped to 87.5 and now we're moving to close it. This is according to the technique. But this is intraday. We're obviously interested in the global setup. And in order to assess the top for Bitcoin, I remind you that, according to my metrics, based on my personal, according to my metrics and technical analysis, I see the top, roughly, at least before a very strong correction, in the range of 90 to 110. We broke through the lower boundary of this range at 90. But we haven't reached 110 yet. Let's see how likely that is. And roughly when to look out for signs that it's time to sell Bitcoin. At least when the top is reached. Well, look at some interesting features. So, these are spot inflows, specifically on Coinbase, that is, the American spot market, the largest American cryptocurrency exchange, Coinbase, from what's interesting. So, this is a 7-day smoothing. Inflows peaked at $140 million after Trump's victory. In March, the inflows were similar. Also around $130 to $140 million when we reached the peak. At the same time, the so-called long side premium, that is, how much money longs pay to shorts for holding a position over the course of 1 hour, is represented by the red histogram. And the blue curve below, averaging, I believe, over 7 days. So, if in March, with inflows of $140 million at the peak, the share of spot, well, rather, I apologize, the share of futures was $1 million to $1.1 million, meaning 70% or more. Now that share is $500 to $600 million, which is less than 50%. What does this indicate? That the so-called exit of Trump was, largely, due to new purchases, new money. This is new money that has come into the system. This is not a futures pump which can be quite easily and quickly dumped and absorbed. This is new money. This is a true exit that will be defended in any case. That's why, in one of my previous videos, I referred to it as Trump's protection. This is a positive point. Very good. So this stick is genuine. This is a true breakout and a continuation of the long-term upward bullish trend. Next graph. What is this the blue line represents? The number of all Bitcoins that are currently in profit. So, to understand, as soon as we reach a new all-time high, accordingly, 100% of Bitcoins are in profit. Everyone who bought them. As soon as we pull back, this number decreases because someone is always buying higher, including at the peaks. So, at the bottom is the yellow histogram. This is a metric that assesses the time range, how long Bitcoin has been on average across all cycles. At the moment of reaching the peak, it was in that zone when over 95% of coins were in profit. That is, the so-called continuation of growth, so I won't keep you in suspense. On average, it was 20 to 22 days. So you can see, for example, in March there was a peak of 21 days, we hit the peak zone, after which a pullback followed. The same in 21, at the beginning it was 29 days, then 29 days, 21 days, 23 days, then a deep pullback. And then the last push before the bear market was 22 days. The same applies, by the way, to the penultimate cycle. That is, the cycle of 17, 16, 17 years. The same thing. 22 days, 26 days, 25 days, 25 days, 28 days. Roughly the same figures. As soon as Bitcoin breaks the peak, it stays in that zone, well, plus or minus 20 days, and maybe a bit more. At the moment, we are in this zone. As of yesterday 15 days, today 16. So there is still a window for growth potentially, conditionally, based on this metric, well, let's say 5 to 10 days. Well, maybe 5 to 15 days, if we look at 2021, considering the strength of this breakout, we could be at it for a while, after which, what kind of correction happens? From 100% of coins in profit, the price typically pushes down by about 5 to 10%. Sometimes 5 to 12%. So, roughly 5 to 12% of coins transition from a state of profit to a state of loss. What the price will be in this case, I don't know. We need to look specifically at the supply in profit, the supply of coins in profit. But according to this metric, we still have a growth window. Approximately 5 to 10 days is more likely, maybe up to 15 days. Next, the same metric, the blue line represents the percentage of supply in profit, while the green histogram, the so-called profit avalanche with averaging, shows an records profit only at those moments when Bitcoin is in the attack zone, and it is, again, in a zone where the profitability of all Bitcoins in the system is over 95%. So, at the moment, profits of around $30 to $33 billion have been recorded in total. If we look at a similar history, then before significant profit corrections, it should be recorded as approximately 1.7, well, alright, 1.5 to 2 times more. That is, for example, before reaching the peak in March, $60 to $65 billion were recorded. Now, I remind you, it's 32. In 2021, the previous cycle, the same before a significant correction, $60 billion, then $52 billion, and then $41 billion. By the way, there's been a divergence in profit already in the long term. Some interesting features. And before the bear market, $40 billion was recorded. That's all more than the current growth. The current exit of Trump. So far, there are only $32 billion here. One can also look at 2017, but it's not as indicative, because the price of Bitcoin was 4 times lower, and it's clear that getting similar profit from it is very difficult. But, even then, it was $33 billion. Even then, with the price 4 times lower. Still, this needs to be compared with 2021 and the March peak here. Roughly the potential for growth remains before a significant correction. The next metric, this is the metric of what is known as fresh supply. The black line represents the price of Bitcoin. The blue line represents the realized price of short-term holders. Short-term holders, I remind you, are anyone who has bought and held Bitcoin for up to 155 days. The red line at the top is the average purchase price, plus 1 standard deviation. The lower yellow line is minus 1 standard deviation. Historically, Every time we reached the ceiling at +1 standard deviation, short-term holders had a huge desire to take profits and put significant pressure on the market. In other words, a serious wave of selling would begin there. This metric worked perfectly in March. We touched the upper red line twice, even 3 times, I would say, after which a strong correction followed. Just as we did at the bottom on the 5th of August, we defended -1 standard deviation. The previous cycle was the same. A pretty good performance in a bull market. Broke through, broke through, broke through. The line reacts everywhere. Here too, we touched it and got a reaction. In 2019, when there was a strong spike, the same thing. We touched it, bounced back, touched it again, entered a new downward cycle. And in 2017, the second to last bull cycle, this metric also performed well. Touched it, fell, touched it, fell. 1, 2, 3, 4, 5. And here was the final breakout. That is to say, the activity of futures. And the overall market was much higher here, and the share of derivatives was greater than it is now. Although, to be honest, I don't remember if there were futures back then or not. But in any case, it was easier to move the price at that time because there were no Bitcoin ETFs or such a large number of institutional investors who could support the price. Exchanges acted less actively as market makers, and therefore the price could fluctuate much more. In other words, one needed to consider 2 standard deviations. Still, it's more accurate to compare with the previous cycle. Currently, there is a very large amount of liquidity. Nevertheless, right now, +1 standard deviation is at the mark of $98,000. That is to say, we haven't touched it yet, and there is potential for it to be touched, at least, or even overshot, so that's 100 and above. And lastly, another interesting metric is realized profit, divided into 2 components: long-term holders and short-term holders. How is this assessed? So this is the total amount of realized profit in the system, which, as of yesterday, was approximately standing at the mark of around $4 billion per day in total. But of that, the red component is short-term holders at $2.3 billion, and the blue is long-term holders at $2 billion. So there you go. As a rule, a global reversal, or a serious correction, begins when not only the avalanche of profit reaches, as shown in that green graph, some extreme values, that is, $50 to $60 billion and above, but also when the share of long-term holders in it exceeds 50%. So, for example, right now, long-term holders have realized $2 billion, while short-term holders have realized $2.4 billion. That is, the share of LTH is less than 50% in this component. And what was it in March, for example? Let's take a look. Here's March. This was the last major realization, $7 billion in a day, but nearly $6 billion of that was from long-term holders, and only $1.1 billion from short-term holders. Here, they really made a significant exit. After which we slightly updated the high and then entered a prolonged correction. The same applies to, by the way, the cycle before the strong correction in 2021. For example, here are the final realizations. The share of long-term holders, LTH, here is above 70%, not just above 50%, but above 70%. This already starts to attract attention. These kinds of realizations, so far, the large realizations are only in absolute numbers, but the share of long-term holders in them is less than 50%. Therefore, a large part of them, I'm talking about long-term holders, are sitting tight and waiting for higher prices. And, as a rule, they know better than we do where to sell. And it's better to watch and follow them in terms of long-term investments. So, the summary of this video is that all these metrics I've shown you indicate. In the short term, all these fluctuations, where I'm buying something, whether I've hit the mark or not, these are all my short-term trades. We need to cool down the overheating. Yes, I showed you in previous videos how the overheating and realized profit look in terms of intraday profit. I don't know if we've managed to cool it down with this correction of 6.5%. Or if we'll go somewhere else, perhaps to take this low at $85,000, which is also quite likely. But these are all fluctuations within, say, this range. And I'm talking about the setup before a serious correction, so to speak, of at least 20%, maybe even 25%, like that. It's still too early. That is, all the metrics I've shown you indicate that there is still room for growth before the first serious correction, both in terms of the activity of long-term holders and the realized profit, as well as the spot component of all this growth, which is really supported by new money. Not just inflated futures longs on huge leverage, but genuinely new money that has entered the market. And this is new. So to speak, a metastable state, this pump that will be defended. And it will be defended very strongly. Well, that's basically it. I hope you found it interesting. I show the metrics in public each time. Different ones. Such things. I don't know how much you need this. Perhaps it's worth sticking to just technical analysis, but at the moment, I see that many of you are indeed interested in this. I hope it stays that way. Thank you all. This was Mozart, and goodbye to everyone.